Do you think by just spending 133 days outside your country, you're safe from the tax office? Or that opening an offshore company or moving your money abroad automatically protects you? Well, I'm sorry to tell you, no, it doesn't. Today, I'm going to share the 11 most mistakes people make again and again. If you're considering moving abroad, stay with me. This could save you from fines, sanctions, and even legal trouble. Number 1. Not declaring foreign accounts or assets. Many people believe that if they open a bank account abroad or have investments in another country, nobody will notice. They start sending their money over there and think, that's it. But really, do you think that works? With TRS, the Common Reporting Standard, and automatic exchange of information, tax authorities across Europe know everything. We're moving towards complete digitalization and transparency. So trust me, don't try to hide anything. The penalties are crazy. Number 2, believing that the 183 days rule is everything. A classic. People tell me, hey, I spent fewer than 183 days in Denmark, Germany, UK this year. I'm free. They move abroad and think they automatically lost tax residency. Wrong. That's only one of the criteria your tax office uses, and there are many more. Number 3, trusting in magic offshore structures. Some clients come to me with companies in place like Estonia, totally convinced they don't pay anything. You'd be surprised how many people say I pay zero, but they're still living in their home country thinking that having a company abroad solves everything. The reality, if that company doesn't have real substance, it's a fake entirely. And believe me, tax authorities are hunting down these setups. Just because your friend hasn't been caught yet doesn't mean it's legal. Number 4, opening an LLC while still a tax resident at home. If you're still officially resident in your country, your worldwide income is subject to tax. That means the profit from your LLC are taxable where you live, not just where the company is registered. So depending on your country, you might end up paying 45–55% in personal income tax. In such cases, it can make more sense to open a company in the European Union that pays corporate tax in a country with a lower rate, like Cyprus, Bulgaria, or Malta. But remember, you'll need real substance to justify if questioned by your tax authority. Number 5, ignoring the exit tax. A lot of people in Northern Europe live in a tax cage without realizing it. They don't even know this tax exists until the shock hits when they decide to move abroad. And let's be honest, governments across Europe are always hungry for revenues. It's like these thresholds will keep getting lower, and crypto assets may soon be included too. So, the earlier you plan your exit, the better. The good news, there are legal structures that can help you avoid or defer the exit tax if done correctly. Number 6, not planning your crypto taxes. This one's a mess. Some people don't declare anything or think as long as they don't convert it to euros, there's no tax. Wrong. Authorities are tightening their grip, and international crypto reporting is expanding fast. If you don't handle this properly, everything you've done wrong in the past could explode later. Each country has its own crypto rules. So if you don't plan before moving or declaring, you could end up being heavily taxed. If you're enjoying the video, a like really helps out. And don't forget to subscribe to our Eludex channel for more content like this as we talk about finances, interesting residencies, and much more. Number 7. Trusting tax gurus on the internet. Let me be very clear. If someone offers you quick, easy, and cheap solutions without properly analyzing your situation, there's no way it's a right one for you. They tell you what you want to hear, and then, surprise! I like to explain it this way. Imagine we're mechanics, and the client's car is broken, but we don't actually open the hood to know what's wrong with it. So run away from magic tax formulas. What works with your friends might not work for you. Number 8, looking for tax loopholes before you even make money. If you're just starting out with your online business, don't waste time or money with consultants selling you the perfect structure. There are no shortcuts. If you work for yourself, you have to register as self-employed unless you're moving abroad immediately. So focus on what really matters. earning money, validating your ID, and growing out your business. You can optimize your taxes later. Number 9, ignoring double taxation treaties. Northern European countries are often very strict about this. You need to understand exactly what the double tax treaty says between your home country and your new one. The fine print matters a lot, and you must be able to prove that you meet all the conditions. Many people move to places like Dubai thinking the treaty will protect them. But if they don't meet the formal requirements like local residency statute, they end up paying taxes back home even if they live abroad all year. Number 10, forgetting about reporting obligations. A very common mistake, not submitting informative declarations. And the worst part, most people don't even know these forms exist. For example, the foreign assets report. Even if you don't owe taxes, not reporting can be extremely expensive. Imagine you own property abroad worth 200,000 euros. If you fail to declare it, you could face minimum fines of 10,000 euros. And if the tax office sees it as concealment, penalties can go up to 20,000 euros or more, even if you've paid all your taxes. Number 11, failing to register or deregister correctly. Many people move abroad and forget to handle the paperwork, either because they don't know how or they're afraid of dealing with the system. You have to officially deregister as self-employed, notify your social security system, and register properly in your new country of residence. If you don't, your obligations remain active, and your home tax office may still demand declarations as if you never left. You could even receive notices or penalties years later, long after you've moved out. See, it's not enough to simply move abroad and think your tax office will forget about you. Most people make these mistakes, and fixing them later is very expensive. So, before taking the leap, plan carefully. Get proper advice, surround yourself with real professionals, and avoid these traps. If you're serious about moving abroad and optimizing your tax situation, I've left a link in the description below. You can book a free call to analyze your case in detail. We'll see if we can help you, and if it's a match, design your personal action plan. See you in the next video.